To the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor. To the AJ Brown Show, where we talk about all things investing.
All right, technical difficulties. Welcome, everyone, to the AJ Brown Show. My name is Cyprian Francis, and as always, the main man of the hour, AJ Brown. Good morning, AJ.
Hey, Sip, how you doing?
You know, I wish I was doing better, but I keep seeing all this drama from around the world, and it just makes me sad. I wish I could do something, but I think that's a big driver of the market this week. If not that, a few other things. What are you seeing on your end? Where do you want to begin the show?
I think that's exactly right, that there's a lot of helplessness feeling out there. Last week, we had left off and we had said that investors pretty much were blowing off what was going on, especially in the Middle East with the Hamas and Israel skirmish. I think I'm probably emphasizing how yucky it is with that word skirmish. But yeah, I think this week they've taken notice, that along with kind of the crap show, which is the U.S. Congress not being able to figure out who's in charge. I think that's put a little bit of fear into our investors. I mean, we can take a quick look at the VIX, which is our indicator of market fear versus confidence. And you can see that just this last week, fear is scooping up. It's above our white dotted line here, which is the overall mean. So we're getting into fearsome territory where just about a month ago, we were touching all-time lows of confidence. So
this is good for our program participants, right? This is good for anyone that's been watching the show, that's been taking on some of your strategies, and that is because premiums are higher, right?
When there's fear, that means that option prices go up. Options are used as a hedge by many of the big market movers out there. So they buy options when they're worried that the price might become unpredictable. And so as they're buying, these prices go up. And in my program and all my participants that kind of follow along with me, what they know how to do is position themselves as option sellers. So you're in a seller's market right now. The buyers are plentiful. The sellers are few. So if you decide to learn how to sell options, exactly right, you're going to get a high premiums right now, higher premiums.
And we'll talk a little bit more about like the concept of flight to quality and kind of how options tie into that. In regards to the Congress, how do you think that's having an impact on the market specifically?
Well, Congress is really the ones who are in charge of fiscal policy, aren't they? They're the ones who ultimately pass a budget. They're the gatekeepers of the purse strings of the all-important booty called the U.S. tax revenue, right? So they make sure that that money gets dispersed and how it gets dispersed. And not having a leader, right? And also having pushed this deadline for another month of having a budget for the next year, it creates a lot of uncertainty because in that budget, it really explains where money is going to go, what's going to have tax incentives, what's not. And, through these budgets, it steers a lot of what the business does. I mean, if you can get government subsidies in what you're doing, that can totally change the dynamics and make, for instance, EV car manufacturers or energy companies be stars or be losers. And so, there's a lot of uncertainty in investors because they would like to follow that government money. And we don't know where that is. We don't even know who's going to be leading the people who create that budget.
And are we thinking that this is starting to have more of an impact on the market than maybe some of the economic news that's coming out, right? Some of the things that the Fed is saying. I know that we've got earnings. So
Mm-hmm.
These longer term concepts are negative,
I think they're
stories.
just, I don't know if they're negative or just overshadowed right now by these bigger headlines. So, the Fed spoke a couple of times. The regional Fed presidents, or Jerome Powell, who's the Fed chief, they spoke at different times, and they were kind of drawing that line between hawkishness and bullishness. So they weren't really adding or subtracting to investor sentiment. But yeah, the news, the economic news came in. We've got things like retail sales on Tuesday actually came in much better than expected, and this was for September, and on August they were revised higher, the numbers. So retail sales, people are still buying stuff. But then also industrial production came in on Tuesday. That's how much we're manufacturing. That's down. So maybe it's taking a while, for the optimism in American shoppers to kick in, because we know that credit card debt is up. We know that repos on cars is up. We know that foreclosures is up. So people are just using that credit to fuel their buying habit. I think a lot of, especially folks in the United States, use retail as therapy. We also are starting to see a slowdown in the housing market, right? Housing starts, housing permits, and existing home sales. Money is just getting kind of expensive to borrow. And so it's slowing. People are waiting to see what's going on. If we take a look, just really quick sip, at investor sentiment around a rate hike in November, it's almost nil, right? In fact, there's actually a small contingent of folks, very small, but a small contingent of folks who believe that there might be a quarter point rate drop. I don't think that's going to happen. It's pretty much a rate hike here. But when you look at what we were seeing just a couple weeks ago, they were thinking that maybe there might be a rate hike in November. That's pretty much off the tables. In December, let's see here. The numbers are also going down. Investors are believing less and less that there's going to be any rate change in December either. In fact, again, there's that small contingent that thinks there might be a rate drop. This number of people who think there's going to be a rate increase dropped. Pretty much people think that through the end of this year, the Fed is happy with what they've been seeing. So that's no longer the news headline. The news headlines are the geo instability. We've still got a lot of stuff going on in the Ukraine versus Russia. We've now got this whole thing going on, whether or not we're going to keep this skirmish isolated in Israel and in Palestine on the West Bank and in the Gaza Strip, or if it's going to spread, right? There was when Biden went over there to try to cool things down diplomatically, that meeting on the other half of the thing was canceled. So people are worried that that's going to be igniting, and so you can see it in their investment dollars. People are moving their money into bonds. They're moving their money into safe investments and taking it out of equities.
And personally, I've been somewhat pessimistic for quite some time, and so at least like starting off in the summer. So I was surprised that the market continued to rise. But I feel like things are starting to come back. The sentiment is starting to reverse, and I'm glad that you pulled up the SPX, because I wanted to get a take on, if we continue in this trend, is there a bottom, and or how far are we going to need to go? Because you do a really good job with your analysis week to week, and we've got this new Nifty indicator in there, and it looks like this week you got a trigger to the downside, and I would assume that that little blue line where you're, what is that, like 41.75, something like that, could potentially be a target.
Well, yeah, I am using our new indicator, which is available to anybody who wants free access to our program. But yeah, we got a confirmation that the reversal we saw on October 11th was we got a reversal on October 11th, and we got confirmation that that reversal was indeed valid just this past Wednesday evening. And so that tells a lot. This retracement analysis, it's very rarely wrong. Let me put in my measuring sticks here so people can see it a little bit better. So once you've got your retracements drawn, you can then use your measuring sticks. I'm going to zoom in a little bit so people can actually see what's going on. First of all, actually, I'm going to zoom in at a different place. I was talking to my program participants yesterday evening on our weekly workshop and was telling them that, as you can see right here, we knew on August 17th, when that market closed, we got the first hints that we were in a downtrend. So this was all the way back in August. It's October 20th. It's 2 months after that. When we got this close below this 100% line, that was our first insight that we were changing directions here. And we went back and we said, hey, if that's the case, it looks like that all the way back in July 7th was the beginning of this new move down. Now, we didn't get quite ideal or mature moves until we got to about September 22nd. So a little bit more than a month after that, we started to say, okay, not only are we in a downtrend, but this isn't a weak downtrend anymore. This isn't perhaps just a slight downtrend with some sideways channeling sprinkled in, right? We're not just going to stall at this level. We're actually heading down. There's going to be some selling off, and sure enough, selling off continued. And then people got excited last week and the week before that we maybe were in a rally, but we were watching this, as you can see here, this pink level that I've got identified here. And we knew that if we had a reversal there, that wasn't actually any sort of rally. That was just kind of a reloading, a little bit of accumulation in order to make distribution even stronger. And sure enough, just 2 days ago, we got a confirmation that that's indeed what's happening. So we're watching now this next move. If we get below, the key number I want everybody to write down is about 4,195. We got 4,194.64 down to the penny, but about 4,195. If we see our current price action go below that, we're currently about 40 points higher than that, 45 points higher than that. If the S&P dips down below 4,195, that's just more confirmation that there's a sell-off, that we're in the middle of a sell-off. And I actually warned all my program participants that indeed we're seeing a mature and ideal downtrend that we're in, and we should be modifying our investing and trading strategies as such. Anybody, I feel bad for anybody who's in a long-term buy and hold position right now, because most symbols that's following the broad market, you're going to be seeing, you're not going to be happy. And even directional swing traders, we're going to be seeing some moves to the downside. You could probably profit on that. But just remember, I've always said this. I got this from one of my mentors 20 years ago. Bulls like to climb up the stairs, meaning, people invest into equities. They invest into, indexes, ETFs, stocks, quite, specifically, and they take their time, and it creates these patterns that are nice and slow and easy to trade. But bears, when the market turns bearish, people are always at a big rush to take their money out of the markets quite quickly. And so the bear jumps out the window. The bull climbs up the stairs, the bear jumps out the window, and we are always surprised about how abruptly the floor comes and the bears hit the ground. So it's a lot harder to trade bearish markets, and you have to be more on your toes. And so that's what we're in. And so you have to be trading accordingly. You also have to really know your symbols, right? Your ETFs and your indexes, because some of them are highly correlated to the broad market and some of them are defensive, meaning they're going to do something else. You can't just trade the charts, right? You have to know what it is that's backing the symbol you're trading.
And for those that are maybe just starting out on that journey, or are you traditionally used to a little bit of that trend, that buy and hold strategy, now is a great opportunity to look into AJ's program and these premium selling opportunities to use this uptick in uneasiness as a way to hedge your portfolio and even make a little money. And so AJ's got a wonderful daily workshop where he breaks down 4 of these strategies in detail, really sets you up for success. I went ahead and threw the link to that in the chat. So if that's something that you're interested in checking out, head on over there. We've got a little bit more in the show. We've got AJ's pick of the week. We've got our speed round. We'll talk a little bit flight to quality. But for now, we're going to take a little bit of a break, and we'll be back in a few seconds.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
So AJ, on to our trending topic of the week. I did see an interesting chart that I'd love to pull up for you and get your feedback on, to see if you've ever seen a movement like this in your career. And that's basically the 30-year mortgage rate, right? Like, look at that spike in the last, year and a half. I mean, we basically in 1.5 years, we're back to the rates that we were at 20 years ago. And so what kind of an impact does this have? Like, this is affecting the real estate market, which has got to have a trickle down into all sorts of industries.
I think that it almost acts like a tax on people's income, doesn't it? It's causing people to want to stay put where they are instead of, move around. I'll give you some good news though. The Fed, with their direct policy changes, affects short-term rates, right? They don't necessarily affect long-term rates. The long-term rates have to come as sentiment, as people's reactions are updated, or are modified to what's going on. And so it's good to see that these yields are going up. What you worry about is what we call an inverse yield curve, where if you invest in a 2-year treasury bond, that you'll get a higher return than if you invest in a 30-year treasury bond. That's called an inverted yield curve, and that usually forecasts that something bad is going to happen. If you're incentivizing people to invest short term versus long term, then that tends to screw up economies. It forecasts that recession or depression is around the corner. Thankfully, the curve is going the way that we hoped it would, expected it would, that the Fed expected it would, meaning that these longer term bonds are now getting to be paying more in return than these short term bonds. This is actually, kind of playing out for a softer landing. The Fed actually commented this past week that the long-term bond rates are helping them, so that they don't have to do any policy changes. So I'm not actually offended by these. And if you look over time, yes, they're the highest that they've been in probably a generation, but not the highest they've been. This is maybe a more natural place for them to be. Maybe we can knock down the interest rate a percentage point or two, but I think around like the 3%, 4% rate is where it would make more sense from an economic perspective. We're just so used to having zero interest rates that we're all a little bit, I think, hurt or offended by interest rates that are higher than that. But it really does make economies work better. Having zero interest rates is really unsustainable for the long term.
Yeah, and when you look at the past 23-year timeline, that 03 to 09, we kind of like bounced around at that 6, which I think most people would like to see us get back down to there more so than where we're at in the 8%. Another topic that I continue to see a lot of conversation around, and that's this concept of flight to quality, right? And specifically gold, right? I think traditionally throughout history, when there's tensions or uncertainty, the value of gold goes up because it's a tangible product at the end of the day. I mean, maybe not the trading components, but if you really wanted to buy gold in the market and go somewhere and pick it up, those processes are still in place. But does that make sense to you now? Why gold is going up? Do you see an opportunity to get involved in that, or are you using any of these defensive names in any of your strategies? Maybe even some of the names that you talked about yesterday with the crew.
So in the crew yesterday, what's really nice is about once a month, the crew and I, instead of doing a screening of a particular candidate and workshop it out, once a month we like to do a hot seat where we take one of our participants and we look at the trades that they've been doing, and we analyze their decision making and give them some feedback on that, as well as give them feedback on what to look for moving forward. And the symbol that our program participant brought to us was Eldorado Gold. So it's funny that you're bringing up this topic. I believe it's EGO. And so you can see here, if we look at a 1-year chart, you can see Eldorado Gold has seen a rally. That's what a lot of equity traders do. There's some ETFs that actually follow the price of gold, but a lot of folks then start investing in these companies, these mining companies that pull the stuff out of the ground. Yeah, that's what happens. You look for these companies that can actually, or you look for things that are involved with an actual commodity that holds value, especially when you're kind of questioning the value of fiat currencies like the US dollar, the Chinese yuan, all the different currencies, the British pound, the euro, the European euro. You tend to go towards these defensive companies. So what we need to do is we need to make sure on a day-to-day basis, not even just once a week or once a month, pay attention to what the broad market is doing and pay attention to what the sectors are doing. So there's just a handful of sectors that trade within the broad market, and then most of our symbols, whether they be exchange traded funds or whether they be stock symbols, are part of those sectors. So I like to actually overlay these sectors, SIP, on top of the broad market and see how much of a correlation is there, or are there sectors that are kind of either marching completely opposite or just marching to the beat of their own drum, doing their own thing. And that can guide us into finding out where is money going defensively. In history, there's been the precious metals, and then funny enough, it's like chocolate and booze. I have seen companies like Hershey and Anheuser-Busch, so that's ticker HSY and ticker BUD. These are tickers that we've traded in the past that have been very defensive. So when people get a little bit uncertain about what's happening in the broad market, they put their money in gold and then they buy a lot of chocolate and buy a lot of booze. So yeah, there's always these defensive candidates out there, and searching them out is a good idea.
Would like defensive contractors be a play given the tensions?
I mean, I think you can't go wrong, especially given that the world is all about conflict right now. I don't think you can go wrong. If you take a look at like a Lockheed Martin, I think that's what LMT is their ticker symbol. You can see that they are definitely not going down with the broad market. And if you look at their earnings, I mean, they make a lot of money, and they also give a lot of money back to their shareholders. So looking at those type of candidates, it's never a bad thing. I know folks who put those type of companies in as defensive stocks or as stocks that they hold in the long term in their portfolio, because they're basically banking on the fact that humans can't get along.
Yeah, that's unfortunate. And we don't want to be those guys to take advantage of what's going on in the world. But as investors, as traders, as people who are involved in the market, we're going to be doing what we can to improve our portfolios. And so if you're watching and you're listening and you're a long-term holder and you're looking for some ways to be defensive, to take advantage of the pullback, options are great. Premium selling is great. That's what AJ's been teaching the folks at Trading Trainer for over 20 years now. And that's why we have the show. And so with that, AJ, I think we could roll into your pick of the week. And so I know that you're looking at a lot of tickers every week, and you're really particular about what names you want to get into. So this week's AJ's pick of the week is Roblox, ticker symbol RBLX. What do you see? How do you think we can take advantage of this?
First of all, I have to thank one of our program participants for putting this on my radar a couple of weeks ago. In fact, we're starting to get program participants that, instead of being who you would expect, which are folks my age, getting towards retirement, that are looking for things to do, we're finding that we're getting, millennials like yourself, Sip, that are really interested in doing this stuff, especially millennial ladies. That's fantastic. It's exactly the type of person. These folks know how to navigate around computers. They know how to handle the trading platforms. They know how to, find information very quickly. It's a breath of fresh air to have these folks working with us. So let's take a look at Roblox. This is a company that has some cloud and client platforms around kind of 3D, applications. So let's zoom in a little bit. You'll notice that this particular company is, in that sideways channeling type of pattern that we like as premium sellers. When something is sideways channeling, you're not going to pretty much trade it any other way than selling premium against it. And what's nice is we can take advantage of that. We can actually turn this into a nice income stream. The other thing I really like about this particular company is that we can get in with one of our strategies where we set up our initial covering position when we're at a top. Now, Roblox seems to be one of these companies that is, marching to the beat of its own drum, but you never know when correlation is going to kick in, when the broad market is just going to keep pressing and finally affect this company as well. So it's really nice to be able to start your premium selling position with an initial covering position that, if the market continues to push on Roblox and makes it go down, that you'll have an automatic adjustment strategy to make this work. So I'm definitely advising a lot of my program participants to look for these symbols where we can get in at a top. So when we get in at a top, we're talking about what? We're talking about shorting the symbol. So if you have a margin account, you can short some symbols on Roblox. If you don't have a margin account, or you want to take advantage of some leverage, the other opportunity here would be to buy some deep in the money, far out in time put options. That would basically be a substitute to shorting the stock. And so, we got a symbol. You can see here I've got my arrows on, and these are slightly different colors. I'm using that same indicator that I give away for free but I have it programmed now to actually give me the fast MACD signals with those arrows. And so you've got a different color arrow showing here, a light blue and a yellow. You can see I got my indicator to go ahead and do that transaction. This was an end of day indicator, meaning on the evening of October 13th, I got a signal that I should start looking for a way to get in on one of the subsequent trading days. I didn't get that follow on October 16th. I didn't get that follow through on October 17th. But on October 18th, right before professional hour, I did get my follow through. And so, I'm paper trading this, but I did go ahead and in my own mind, look at getting an initial covering position in place here. Now, you can see yesterday that, we're questioning whether or not that follow through was valid. But then today it's coming right back. So I'm quite comfortable with the signal that we got on Wednesday. And we'll see how this plays out. But once you've got that initial covering position in place, SIP, we're set for all sorts of things in the not too distant future. We could sell our put premium, buy some protective calls, or if this thing does succumb to the overall negative pressures in the market, this turns into a great directional trade.
Yeah, that's what I was going to say. With that additional pressure, you could get the follow through that you need to bring that down. So that's AJ's pick of the week. Roblox, ticker symbol RBLX. We did have a couple names from last week and even the week before that I think are worth reviewing. Let's go ahead and start with Zoom. Zoom, the video recording company, ticker symbol ZM. Are we still in it? Are we still keeping an eye on it?
We're still keeping an eye on it, SIP. We never got another signal. And just for folks out there, you'll notice that I use a little bit of a ruler. So I identify my channel support and my channel resistance. And I identify that support and resistance based on the number of touches we've got of each. Because the way that the psychological mind works when you're investing and you're looking at the charts is, don't necessarily trade the outliers of support and resistance. You trade where the typical reversal has occurred in the past. So you can see here, we've identified support at about $64.50 and resistance at $73.75. But then, if you look at probabilities and you've been following this stuff for a while, so if you haven't been following it for a while, you could just kind of go by my experience, so you can kind of walk in my footsteps and just know what I've seen in the past. You can have a symbol go as much as about 40% outside of the channel. So in this case, going as low as $60.80 or as high as $77.45. And there's a high percentage probability that the symbol will still go and cross across the channel again. So we haven't quite counted out Zoom, but we're watching that $60.80 profile or that threshold quite closely. And we're hoping that we see a nice confirmed and validated signal for a bottom, because if that's the case, we might consider doing a small position on Zoom. And only because Zoom also seems to be bucking the system, right? It seems to be pushing away the broad market tide of the tides going out in the broad market. Zoom seems to be going aside, kind of marching to the beat of its own drum. Like I said, I have been suggesting to my folks that they only enter in on tops. So, I would make this a smaller position than even what our risk sizing software would tell us to use. I would make this a smaller position if we want to get in on the bottom of Zoom. And I definitely wait for the signals and pay attention to that threshold.
All right, that's Zoom. And the other name that we've been looking at the past couple of weeks is GM, which is still dealing with that auto strike drama.
Yeah. My wife and I have been paying attention, and we've been seeing, interestingly enough, a year has gone by and so much has changed with especially the EV market, right? now there's a whole bunch of cars, EV cars, just staying on the lots, and a lot of that is being caused by like a Tesla. Tesla keeps dropping prices. I think they've dropped prices of all their cars, I think 6 or 7 times in just the last few months, and so they're pretty much making it impossible for some of these other companies to even get a foothold. So it's quite interesting. You could get a Model S now, whereas like a year ago, a Model S was, I think, in the 105 to 120,000 range. You can get a new Model S for under 80 now. They're trying to make it so that the Teslas qualify, even the high-end Teslas, the Model X's and the Model S's qualify for some of these government subsidies. With that said, GM, not only are they trying to break into the EV market and not having much luck, but they've got the United Auto Workers, which is another, GM, Ford, Chrysler are really having these United Auto Workers demanding, that they get paid, and that they're pointing a lot to the inequality between upper management and the workers with respect to pay. That's really taking a toll. We've been talking about how we've got some belief in GM, but I'm going to say the same thing about GM that I am at Zoom. We identified support at 32. We identified resistance at 41. So we kind of have this drop dead zone. I've got this number on top of me here. Let me see if I can put my cursor here or get this. I don't even know how to get this thing out of the way. But I've got, I apologize for fumbling around with my software. $28.40. So we're waiting to see if we can't get some sort of confirmed long signal. In other words, some sort of signal that tells us it's time to think about buying GM. But again, you can't just trade the stock on the chart alone. We've got earnings just around the corner next week for GM. We've got this United Auto Workers. Maybe we need to take GM off of our list until GM becomes a boring stock again. It's not in the news anymore.
Yeah, and that would certainly, if they could figure out the United Auto situation, that
would be significant. That would be
a nice move to potentially ride. All right, so that's a few recaps and AJ's pick of the week. Let's go ahead and run through our speed round. These are some of the other names that have been brought up this week. Let's go ahead and start with a household name. Everyone, I think we just celebrated a 100-year anniversary this week, and that's this is Mark from Long Beach, California, interested in Walt Disney Company, ticker symbol DIS.
All right, so Disney, it's a little bit up there in price. What's interesting is I think it wasn't this past week, but the week before, I'm going to, if my memory serves me, which I've turned 50, my memory doesn't do anything for me anymore. But I think it was AIG. We looked at AIG, and AIG is trading up there. Let me just bring that up for you guys. AIG is trading up in the, $60 to $64 range, something like that. And usually I've warned that when you have that more expensive symbol, that a lot of times it prices out our folks with smaller portfolios. But what we found with AIG and what I found looking closer at Disney is because we're in this tested channel. So you can see here that we've got 2 tests of support around $79.50. We've got 2 tests of resistance around $85.50. Because we've now got this nice contained sideways channel that's forming, we can put our bailouts, our risk stops, or where we buy our protective options and sell our premium pretty tight around the channel. And that means that the risk we're taking on isn't significant. So we don't size our positions, SIP. We don't size them based on the actual price. We size them based on the risk that we're taking on. So in reality, if we can get a beautiful pattern like this that's forming and tighten up our trading channel, our trade zone, we can trade a more expensive symbol with less of a portfolio. So I like that. This is Mark. Mark, I like that. I like that we just got a confirmation on Wednesday. Now, this was, again, this is my fast MACD signal. I'm going to zoom in a little bit so you can see that even better. This is my fast MACD symbol that came on Wednesday. And if I pull up an intraday chart on Disney and I zoom into yesterday, when I get a signal like I did on Wednesday, and that was again after the market closed, I'll try to trade it on Thursday. So how do I try to trade it? Pretty straightforward. I just want to make sure on Thursday that a couple of criteria. If I'm trading a top, I want to make sure that when I do get into the position, I'm trading lower than yesterday's close. So in that case, the previous day close was 84.67. I want to make sure I'm trading lower than that. And in addition, I pay attention to the first 30 minutes of the day's open. That's called the open range. And I want to make sure I'm trading below the low of the first 30 minutes. And so in addition to trading below 84.67, I want to be trading below 84.24. And I usually don't come in and do my position sip until the afternoon session. I do that because I want to, let amateur hour pass. I want to let the morning where all that economic news is released or any news from the day about other things happening, that it's all kind of been released and people have internalized it. So I don't come in until the afternoon. And so you'll see that in the afternoon, all the way through the last hour of trading, we were trading below those thresholds. Now, I look at a couple of other things in addition to that, but you would have gotten your follow through, and I would have actually recommended to you that yesterday afternoon was the perfect time for you to go ahead and either short some Disney stock or buy some back month deep in the money put options, so that you could either take advantage of the down move that seems to be forming on Disney, or if it stops short at that level of support that we found around $79, you could then start creating some income streams out of it by selling premium. In this case, you'd be selling put premium and profiting on the rolling out of protective calls. So I think, you found a winner here. I hope you took advantage of that, opportunity yesterday.
All right. Thanks, Mark. I did see an interesting note from Disney this week that ESPN is one of their most profitable divisions. It makes more money than I think some of their movies, which
I wouldn't doubt it.
And they're trying to sell it off, I think, or they're trying to sell off pieces of Disney. So there's definitely a lot going on over there. All right, moving on to another name that's hitting a lot of headlines the last, I think, 48 hours. This is Jen from Brooklyn, New York, interested in credit card manufacturer, distributor, American Express, AXP.
I've always liked American Express. They're a little bit different than Visa and MasterCard, where Visa and MasterCard are simply a processor, and there's banks behind them that get involved with them, and they make money off of the fees of making it possible for banks to be in the credit card business. American Express has its own bank, right? That's the whole thing behind American Express. So they're not just the processor, but they're actually the back-end bank as well. They had earnings this morning, and they really didn't, impress investors with what they had to say around the, way they make money, the tightening, the number of card holders, all of that good stuff. So you can see investors kind of are hammering them on the head today, Jen, but it doesn't look like there has been short duration resistance that was established around $144, something like that. We're a little bit below that, but American Express has an amazing amount of resiliency as a company. Still, with that said, financials are going to be totally susceptible to what's happening in the broad market right now. So look for that correlation. I'm not sure about we got a signal last night. It's more of an earnings play. I almost wonder, Jen, did you get an opportunity to trade the implied volatilities on American Express? Because I think that that would have been a really good thing. I don't know if you guys remember about 3 months ago when we were in earnings season, we talked about our earnings plays, and that's where you do you typically, if you've analyzed it and you realize there's not going to be much price action the next day, and I would group this, the Fed, American Express, it looks like it's moved a lot, but in the bigger picture, it's not moved a lot today at all. So what you can do is one of these calendar spreads where you use an option in the back that has a stable implied volatility, and the front month option that you're selling to get into this position has a very high implied volatility. And then when you go ahead and unwind the trade the next day after earnings has been released, the implied volatility almost drops overnight. And so you can actually then buy that thing back and make a nice little pretty penny. I think that would have been a good play. But for now, as far as any other plays, I almost want to see this mature a little bit past this earnings date. Let's wait until next week to really get an idea whether we can turn this into a premium trade or if we want to trade it at all.
Yeah, and it's a little bit up there at 142, even up there up to 180 not too long ago. So thank you, Jen. That's American Express. Moving on to our last name of the day. This is Samir in Charlotte, North Carolina, interested in Teladoc, ticker symbol TDOC, which probably was doing a little bit better during those pandemic years.
Yeah, let's take a look at a bigger picture here. Let's look at 2 years. Yeah. So you can see that. Let's go back even further. I'm curious because the pandemic is really starting to be in our rear view mirror here. Although, the number of COVID cases recently has been picking up.
Don't say that, AJ. Don't say that. I don't want to hear
it. Especially in big cities where people are close together. I've noticed around here in Washington, D.C., the masks are coming out again. So they had their real big thing. This is a technology company that is trying to change the model around healthcare. So all about the telehealth, all about getting you a response within 24 hours, being able to get you diagnosed and things like that. So it's a neat play. It really depends. Who is this? This is Samir. It depends on kind of your outlook, how you want to play this. I would say I'm looking at the earnings. I'm looking at 3 years worth of earnings, and they never really have made a profit yet, quarter over quarter. In fact, looking at the stock price, they've kind of stopped the bleeding, but it's still, they don't have a scab yet on their wound. They're still trying to figure this out. It looks like they have found a bottom and they're kind of sideways. Let's zoom back in and see what's happening more on like a 6 month scale. There's still a little bit of bleeding. Ever since there's been a tightening of monetary policy by the Fed, it's been really important. You're seeing a lot of these companies that were existing and not thinking that they needed to make a profit. It's almost like amnesia, because that was what brought down the dot-com bust and dot-com boom 20 years ago. Same thing with these companies. If you can't turn a profit, you're not going to live in an environment where there's a tightening monetary policy, where money actually costs something. It's not free anymore. So I worry about getting into any long-term plays on this. I wonder if you're thinking about short-term, like being able to make money on the demise of Teladoc. I'm not sure I can admit that either, but I do see that they're going to be reporting earnings. Let's see. It's going to be October 24th after the market close. So October 24th,
Tuesday.
That's going to be Tuesday. So either today or Monday. And again, we can look back. Last time they reported earnings, there was actually a big pop in price. The previous time, investors kind of blew it off. If we go back about a year, the previous time, investors initially blew it off. The time before that, 1 year ago, investors got kind of excited. I almost feel like this could also be another earnings play. So the recipe behind that would be possibly a calendar spread. Calendar spread works best if you can perceive that there's not going to be much movement afterwards, or if you do know movement, if you have a good feeling or a good insight into the movement, placing the calendar spread to profit on that movement. So putting the strike price to the above or below, depending on where you expect it to go. But those calendar spreads work very well with implied volatility changes. So the recipe is the back month option is about 6 months out. The front month option, you're actually going to use one that's only about 10 days out. So you're going to use a weekly option. That's probably what I would research here. And if I didn't get into it today, I would get into it on Monday and then expect to get out a day later and take your money and run. But I'm not sure about Teladoc unless you've got some insights, Samir, and you feel like you'd like to get this thing in your portfolio. My knee-jerk reaction is let it get past earnings and then take inventory at that point if you want to do any sort of longer-term trading besides just an earnings play.
I mean, that's crazy when we look at that like 3-4 year where it was up to like $280. I mean, that's quite a fluctuation in a ticker.
Yeah, money was definitely cheaper back then, and so people were investing on any idea that was coming around. And there's a lot of those ideas that folded, and then there's a lot of them that when money's went to about 10% of what it was, they were able to figure out a base business model and start to make it work. And again, as far as the longevity of this particular company, I'm a little bit worried around this. Look at some of these losses, $23.49. Then you got 45-cent loss per share, $19.22 of a loss per share. That's like the whole stock price.
It's crazy.
So I worry about companies like that can't figure out how to run their business.
All right, Samir, thank you for that. Teladoc. We'll see if anything comes to fruition there. All right, AJ, heading into the end of the month, heading into holiday season. I was just looking at Twitter and I saw hashtag stock market crash is trending today. So I don't know if that's something that's going to continue through the rest of the week, next month. What are your thoughts? What would you be advising anybody that's got a portfolio seeing it go against them every time they log in to check?
Yeah, you know what? That's what my retracement analysis is telling us loud and clear. The retracement analysis is telling us that indeed we're in this situation where this downtrend is becoming more than ever. We count a lot on seasonality, so we know that there's going to be a buying season going on, but at the same time, you can't help but ignore or help but observe that people are already borrowed quite high. So we wonder if this is going to be a big holiday season or not, or if people are going to put on the brakes with respect to buying. So the question is are we going to see a little bit of a rally? I have been saying for a while now that 2024 looks like it's going to be a year of reckoning. I still think that it's possible for a soft landing despite the history of very few soft landings that the Fed has been able to do. That means being able to not put us into a recession in order to slow down the economy, but keep things growing, but growing less and less. So there's a needle to thread. Don't forget as well for my investors that today's options expiration day for October. That means any sort of expirations that occur worthless, you're going to get to keep that money you collected earlier in the month, and we're going to look for opportunities to do that again. But keep in mind what I've been telling my program participants. Let's get in on sideways channeling symbols, but let's try to get in at the top reversals rather than bottom reversals.
And I also want to give everyone a quick reminder that if you've enjoyed the broadcast, if you've enjoyed some of the strategies and approaches AJ has showcased on today's episode, and you want a little bit more involvement, you want to get in a little bit more personal approach to looking at your portfolio, your strategies, AJ's got a wonderful one-on-one coaching program. I've gone ahead and thrown the link to that in the chat. If it's something that you're considering, if it's something you think you need a little bit more help on, head on over there, sign up. We won't waste your time. We won't hit you with the hard pitch. You'll get the answers that you need and hopefully a solution to getting your portfolio in a good place. Is there anything else that you want us to take a look at here, AJ, before we close the show out?
I just want to let those folks know who have signed up for, not signed up, gotten themselves free access into our web portal, SIP. We've been offering that where you can download my indicator. Right now it's for Thinkorswim, and we've been updating it. We'll be including an update over the weekend. We've got this really cool column that has some programmings that my programmers have done that gives us the percentage of extrinsic value in an option. And this helps us choose what options. You can see here, it tells you exactly what percentage this particular option. This option is 3.73% extrinsic. This one's 7.51. It helps you find those option substitutes that you would use instead of the stock itself. And you can see over here, we've got the same thing running over here on our puts. You can easily determine which option you should use as a substitute. So I'm going to be making that available to anybody who has free access. So if you don't have free access yet, if you haven't downloaded my indicator or checked out some of the, little short courses we've done and the white papers I've written, if you want to get access to this little tool that tells you exactly which option to use as a substitute, we'll be releasing that to the free access this weekend. So definitely take advantage of that, folks.
Yeah, that's awesome. And I know that's a topic that we've discussed many times. So maybe next week we could go a little bit more into detail, because is that when you're always doing the calculator thing where you're, so now it's automated.
No more calculator. Now it's automated. You can go ahead and just look at this column and I can say, hey, this one is going to behave just like the stock, only inverse. So I rather, instead of buying the stock, this is that Roblox, instead of trying to short a stock for $31.25, why don't I do a nice cash trade at $11.70, and it'll act just like shorting the stock. This will go up dollar for dollar at the same rate that this goes down dollar for dollar. And you know that just by looking at this column. So check out that free access, folks, because I'll have a little short tutorial video, not only on how to install this, how to get it from us and install it, but also how to use it.
Awesome. Once again, the link to that is in the chat, tt4.me/indicators. And we'll go ahead and close the show out. If you've enjoyed the broadcast, feel free to hit that like, hit that follow, hit that subscribe button. We do appreciate it. Hopefully you can take some of the insights and names that we went through today and keep an eye on them, add it to the watch list, paper trade it, sign up for one of the courses. Hopefully we can see a little bit of a calming weekend. Hopefully the news of some sort of peace talks comes to light. And otherwise, we'll be back next week to talk about options, premium selling, and how you guys can improve your own investment portfolios. AJ, any final words?
Have a good weekend, everybody.
All right, guys. We'll catch you next week.
Bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.